Hi everyone, this is Team 2's presentation on Chapter 15, Accounting for Colleges and Universities. And now I'll be presenting 15-1, which is the differences between the public and private university financial reporting. And so first we have the public one, and the public universities follow the GASB reporting standards, and most of them also follow a business type activities model, which is like the proprietary funds that we learned in the prior chapter. And the first photo we see is of the statements of net position, and I'm using the University of Guam since that's what we use for our research project. And the main thing to remember here is the terms of the public universities, which is a net position. And so at the bottom you can see the breakdown, which is typically into unrestricted, restricted, and net investment in capital assets, but UOG has specifically broken down even restricted into non-expendable and expendable. For more details. And the next photo we have is the statements of revenues, expenses, and changes in net position. This is not very different from what we already learned. And so we have like the operating revenues, the operating expenses, the non-operating revenues, and then we have the change in net position. And so really the important thing to remember about public university financial reporting is the terminology of net position. And then finally, we have the statement of cash flows. And so according to GASB, we are required to use a direct method for creating this statement of cash flows. And then another thing to remember here is the government-specific classification. And so I presented this before, but in the past, people have said that the regular classification under the regular statements of cash flows in FASB do not really apply to the government, that there's specific classifications. So as you can see, we have cash flows from operating activities, from non-capital related financing, from capital and related financing, and investing. And then we have the reconciliation at the bottom. And now that brings us to the private university reporting, and this is following the FASB standards, and it's similar to non-governmental, not-for-profit organizations. And this is again not-for-profit, that's non-governmental. And I'm just using the example that was in the book for the Valley College, which is a hypothetical private college. And as you can see, one big difference between this and the last one is that this is called the statement of financial position. And another thing to see the difference is under net assets, it's a different classification. So now it's without donor restrictions and with donor restrictions for time and purpose, and then the endowment. Essentially, there used to be one for temporary restricted, but after the ASU 2016-14, that changed and they took that classification out. So now it's just typically without donor restrictions and with donor restrictions. And now that brings us to a statement of activities, which is not different from what we've learned. Like you said, there's the revenues and gains, expenses and losses, and then the change in net assets at the bottom. So we're using the terminology of net assets now. And then we have the statement of cash flows. And so for FASB, we have the option to use the direct or indirect methods for creating this statement. And then this is the typical three regular classifications. We have the operating, investing, and financing. And I just wanted to go over the CFI ratios, even though it's not in our learning objectives for the exam, but it applies to our research project. And so CFI stands for Composite Financial Index, and this is from the Kubo, not from the book because the book is outdated. This is updated for after the FASB ASU 2016-14. And in this advisory, it gives you pretty much all the CFI ratios that are updated. Specifically, what was updated is for the expendable net assets. As you can see, the new terms are in blue. And expendable net assets, essentially, now that the classification of temporary restricted assets is non-existent, we add net assets without donor restrictions plus net assets with donor restrictions that are for time and purpose. And then we subtract the net investments in the plant, and then the net property, plant, and equipment, and then we add total plant-related debt, and that gets us our expendable net assets. And so everything else is pretty much normal, except under net operating revenues ratio, we have the total operating revenue without donor restrictions, and then we have to subtract the total operating expenses. So pretty much anything that has to do with the donor restrictions, because of that classification change in ASU 2016-14, we have the new updated ratios here. And the CFI ratios are typically what we use to assess the financial health of colleges and universities. It's called like the gold standard by NACUBO. And so it's a really good thing to remember when we are doing accounting for these universities and colleges.
Now we move on to the operating statements. Revenue and expense accounts that are typically used for colleges and universities are those recommended by the National Association of College and University Business Officers, or for short, NACUBO. For revenues, all institutions should recognize them on an accrual basis. Examples of the revenue accounts other than those listed here are appropriations typically from the state, investment income, and auxiliary services. Under tuition and fees, GASB recognizes gross tuition and fees as revenue, even though some of it will be offset by tuition waivers, scholarships, and fellowships. Just as an example, this is what the journal entry is for tuition and fees under GASB, and as you can see, the contra account here is used to report net tuition and fees on the financial statements. Under FASB, they require private institutions to follow FASB ASC 606 when recognizing tuition and fee revenue. On the other hand, tuition waivers received as part of compensation should be recorded as an expense instead of a reduction in the transaction price. For contributions under GASB, it requires public institutions to recognize contributions as non-exchange revenue when all eligibility requirements have been met, and the requirements can be found under GASB Codification Section N50. For FASB, under contributions, they require private institutions to recognize unconditional contributions as income in the period it was made and report increases as either net assets, with or without donor restrictions, depending on its provision. This also applies to unconditional promises to give, even though it may not be legally enforceable. And FASB also requires the estimates for uncollectible pledges receivable account. For grants and awards, colleges and universities also receive significant dollar amounts of grants and other assistance from governments, foundations, and corporations. And whether the assistance is recorded as an exchange or non-exchange transaction depends on if the resource provider directly benefits. Colleges and universities should not report grants as exchange transactions or operating revenue without careful consideration of the terms of the grant. Now for the expenses under the operating statement. Expenses are also recognized on the accrual basis by both private and public institutions. The classification of expenses can be on a natural or functional basis. And as I mentioned, most private and public institutions use the NACUBO functional classifications. These are the accounts under NACUBO for expenses. And aside from those listed here, some accounts under expenses are public service, institutional support, operations and maintenance of plant, which is only for public institutions, as well as hospitals and independent operations. And now, as you can see from the accounts here, NACUBO functional expense accounts don't clearly define program and support functions. To be in compliance with FASB, private institutions must report expenses by nature, like salaries or depreciation, and function, like program and support expenses, in one place either on the face of the statement of activities, in the notes, or as a separate financial statement. Within each of the functional expense account categories listed here, accounts are kept by organizational unit, project, or other classification that provides useful information for users. Further detail under each of these object classifications is usually kept to facilitate planning and control. For example, personnel compensation may be subdivided into salaries, other personnel services, and personnel benefits. Now we move on to segment reporting. Now, as mentioned earlier, GASB requires public institutions to use business type reporting to present segment information in the notes to the financial statements. A segment is an identifiable activity for which one or more revenue bonds or other revenue-backed debt instruments are outstanding, and an example is revenue bonds for residence halls or bookstores. And the required disclosures are listed here on the slide. And under FASB ASC section 280-10-15, it exempts private colleges and universities from segment reporting.
All right, so for the third learning objective, we will be discussing some accounting and reporting issues for colleges and universities. Beginning with the statement of net position or financial position, we have loan assets, and I just made this little table so it's a little easier to understand and read. So if we were to have a cash contribution given to us by a donor for the purpose of student loans, a private college or university would classify this as net assets with donor restrictions, whereas a public college or university would classify it as restricted net position. On the other hand, if we were to have the board designate a certain amount of cash for the same purpose, a private college or university would classify this as designated net assets without donor restrictions, and the public sector would classify it as designated unrestricted net position. Again, with an external party loaning us the cash for the same purpose, both private and public colleges and universities would classify this as a liability. Next, we have capital assets. Now, under the FASB standards, it is required to report intangible assets as a separate classification, whereas GASB standards have intangible assets classified within capital assets. And as a result, they both have the same recording and reporting requirements and use a modified approach where maintenance costs are reported instead of depreciation expenses. And finally, under this statement, we have net assets or net position. So under FASB, we have this titled as net assets, and this is further broken down into either with donor restrictions or without donor restrictions. On the other hand, GASB has this titled as net position, and it's further broken down into unrestricted, restricted, and net investment in capital assets. Okay, so here we have the next statement, the statement of cash flows. Under FASB standards, private colleges or universities are able to use either the direct or indirect method, whereas GASB standards require the direct method, and it is further broken down into operating, investing, non-capital financing, and capital and related financing activities.